Well, let's go to the employment picture. Brooke Thackray's got some thoughts there, and why the labor picture in both Canada and the U.S. could continue to deteriorate, notwithstanding the fact, Brooke, that unemployment rates in both countries have risen over the past year or so. What are your thoughts here?
Well, they're still historically low. And even Powell yesterday was mentioning in the press conference after the interest rate announcement. He's saying, look, we're looking at employment, it's historically low, but there's other factors. There's a whole bunch of other different measurements as far as measuring unemployment. Like this morning, we had initial jobless claims come out. That's an employment picture. It came out worse than expected this morning, which is affecting the markets a bit. But one of the ways I look at the labor market, too, is because a lot of this, the numbers are getting confused with the part-time numbers of jobs. And so part-time jobs have been increasing, and they get counted as part of the non-farm payroll number.
Right, right.
And so, the economy can be deteriorating, and the numbers look okay because part-times are going up, but that's not necessarily a good thing. Mm-hmm. And so one of the ways I like to look at it is from employment from people that are usually employed full-time and currently have jobs. What's that metric doing? So we're just looking at the full-time measurement there on a year-over-year basis. Mm-hmm. And that's actually been going down. And that's actually a signal very often that when it gets to a negative growth rate, that we are actually entering into a recession.
Okay, so here's another graph. You can see the baseline is the white horizontal line running through to the 0 point on the right-hand axis. The yellow shaded bars are periods of recession from 1990 through to the present period, and the white line, Brooke, is the rate of unemployment, correct?
For full-time.
For full-time.
Full-time employment, usually work full-time. That's what it is. And if we go back and we look at 1990, that yellow bar there, you can see when the employment went to zero, so on a year-over-year basis, and then we entered into a recession. That happened again in 2001. Mm-hmm. It happened again in 2008 as well. Mm-hmm. And then with COVID, it was so fast. But here we are. We've now crossed that zero line again. Mm-hmm. And we haven't entered into a recession. I mean, maybe it's because we've been whipped around because of the COVID numbers, but this is usually a sign that a recession is imminent when we're seeing employment actually decrease for full-time employees.
Full-time employment. Do you think that's the case? Do you think it sounds like you do not accept the so-called soft landing scenario that many investors are embracing right now?
I know that's the majority is the soft landing. I think that the numbers, the interest rate hikes that we've seen over the last couple of years are actually still working their way through the system. There's a lag, and I think it's inevitable that we're actually going to have a slowdown. I think it's not going to be necessarily a crashing landing, but I don't think it's going to be a soft landing. I think it's going to be more than a soft landing, and I think the economy is going to struggle for a while, no matter what happens at this point, even if the Federal Reserve cuts rates or the Bank of Canada cuts rates as well. I think it's baked into the cake at this point.
What's that mean to markets? Are stock markets overvalued?
It's not good for markets overall. I mean, you're going to have to be a little bit more picky and choosy about different sectors and different companies that you could be attracted towards in that type of environment if we do see a slowdown taking place.
That's Brooke Thackray and